now hand the conference over to Mr. Bharat Shodha from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, thanks, Rutuja. On behalf of ICICI Securities, let me welcome you all to the Q3FY21 earnings call of Filatex India. From the management, today we have Mr. Madhusudan Bagaria, Chairman and Managing Director, Mr. Ashok Chavan, Executive Director, and Ms. Tuti Bagaria, Senior VP Corporate Strategy. I now hand over the call to Mr. Madhusudan Bagaria for his initial comments, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Bharat. Yes. Good evening and a warm welcome to all of you attending this earnings call for the quarter ended December 2020. I presume you would have gone through the presentation which has been uploaded on our website as well as on the stock exchanges. Joining me for this session are Mr. Chauhan, our Executive Director, and Ms. Tuti Bagaria, Senior Vice President, Corporate Strategy. Let me begin this address on an exuberant note. This quarter under review has been extraordinary. If Q1 was a setback, then Q3 has been, if I may say so, a comeback, and that too with a thump. The textile industry went through a very tough period from April to July. Following the measures to cope up with COVID-19 after a restart, it was expected to be a U-shaped recovery, and I must admit it has been better and is more like V-shape. This recovery is not just for us but for the whole textile sector. From July onwards, the downstream textile units started functioning again amidst scattered orders from domestic buyers. By Diwali, most of the units got many orders across the country. Not only were the domestic manufacturers able to exhaust the unsold inventories, but also the entire textile chain, especially in Ludhiana and Panipat, later on in Ahmedabad and Surat, experienced unprecedented business opportunities, leading to firm demand for fibers and filaments. Domestic textile units are getting extra export business as global brands are finding it risky to depend on suppliers only from a single country due to the pandemic. China, being the dominant supplier, is obviously losing some part of its supply to India. The new situation has led to advantageous position to many small units in India. This in turn has perked up the demand for yarns and fibers and likely to remain strong, as even imports of fabrics from China have reduced substantially. Before I go on further, let me go through the results of this quarter, Q3FY21. We have achieved a production volume of 85,200 metric tons as against 72,700 metric tons in Q2FY21. However, in year-on-year comparison, it was 90,100 in Q3FY20. But if we talk about only yarn production, it was 85,800 metric ton in Q3FY21, 67,700 in Q2FY21, and 83,200 metric ton in Q3FY20. This shows that our yarn production has been highest till now in Q3FY21. We achieved sales volume of 86,500 metric ton in Q3FY21 as against 75,200 in Q2FY21 and 92,000 in Q3FY20. Around 95% of last year's figures. Similarly, if we look at only yarn sales, it was 86,100 metric tons in Q3FY21, 69,000 metric tons in Q2FY21, and 83,500 metric tons in Q3FY20. The revenue from operations was 722 crores in this quarter as compared to 508 crores in Q2FY21 and 720 8 crores in Q3FY20. Our DDY capacity after commissioning in August 21 has given us the expected benefit of production. In our last address, we had said, quote, in the coming months, we expect our EBITDA margins to improve further, close to double digits, unquote. I am pleased to inform that EBITDA for this quarter has been in double digits at around 16.65%. While EBITDA as a percentage is more prevalent among the investors, it is appropriate to mention that in our type of industry, it should be seen on absolute number basis. The effect of stimulus through government policies for the textile industry, in which polyester now plays a dominant part, is getting visible. Abolition of anti-dumping duty on PTA has led to improved margins. Our global competitiveness has also improved. On the export front, though there are good number of inquiries, the opportunity is not fully cashed as there is still shortage of containers and freight rates continue to be high. Despite these constraints, we managed to export 10,879 metric tons in this quarter against compared to 11,841 in Q3FY20. We strongly reaffirm our assessment that polyester will become the backbone of the resurgent Indian textile industry, and we continue to maintain a buoyant stand for polyester business in the coming years. The Government of India has realized the importance of textile industry in terms of job creation due to its innate nature. Textile business, including aprons and garments, is rather labor intensive, and skill sets are easily replicated to new entrants of workforce. Government at the highest level has also realized the importance of synthetic filament and fibers and its increasing role in global textile trade. The policies are being reviewed and modified to remove the hurdles for rapid growth. There is a long pending demand for correcting the inverted GST structure for polyester fibers. We remain optimistic the government will consider one GST rate for the complete textile chain covering all natural and synthetic fibers, right from raw materials to the garments and other finished products. A uniform GST rate across the whole value chain will accelerate the growth and mitigate working capital stress. This step will certainly boost the domestic production and consumption. Remission of duties or taxes on export products scheme, RODTEP scheme, is also going to be introduced soon. This scheme will be replacing MEIS, which is not compliant to WTO norms. Government has also announced production-linked incentives in which garments and fabrics are covered. These incentives will certainly add to improve financial performance of the textile sector. All such incentives in downstream textile chain will spur the demand of synthetic fibers and filaments. The gap between Indian and Chinese manufacturing capacity is very large. China being around 8 times the capacity in man-made fibers. If China is numero uno and India at a distinct number 2, the third one is only at 20% to that of India. With a slowdown in China due to high labor cost and international sentiments, the prospects of synthetic filament business in India are bright. Given the thrust of government policies and initiatives, it wouldn't be surprising to see Indian manufacturing capacity doubling up in next 4 to 5 years. We have commissioned 1.4 megawatt rooftop solar power plant. Our captive thermal power project of capacity 30 megawatt, after facing delays due to the national lockdown, is now back on track, and the work is now going on in full swing. The fabrication and erection work is going on almost round the clock. We expect the commissioning of the project in April 2021. Upon completion, the project will ensure that the plant at Dahej gets stable power along with savings in energy costs of about rupees 45 crores annually. The vast increase in the generation of post-consumer PET plastic waste as well as fast increasing pledges of brand owners around the world to include recycled content have resulted in a pressing need for efficient recycling processes. As mentioned in the previous con call, we had initiated in-house research work on recycling of polyester waste in all forms. This process is based on the chemical depolymerization of polyester waste, removing color, additives, catalysts, etc. before repolymerization. Our pilot plant trial results are encouraging enough to intensify our efforts for establish an economically viable process. The demand for recycled polyester is increasing gradually in the international markets as there is greater focus about sustainability in the textile sector. Many reputed international brands have expressed firm commitment as well as readiness to pay a substantial premium for recycled polyester products. Our in-house research work is progressing well and the results are very exciting. Focusing on innovation in our existing operation at the plant, the company had set up a product development team to develop specialty yarns like hollow POI, multiple profile yarns with unique properties. Several such products are currently imported. These efforts were badly hit by the national shutdown. It has now gained momentum and sampling trials for knitting and weaving into fabrics have started. It is a development process wherein fabric manufacturers take long time for checking and approving the yarn. We are confident of having a better performance in the fourth quarter. Thank you all for listening patiently. As the results of this quarter have been phenomenal, I am sure many of you have questions. I am all ears. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi. Congratulations for a good set of numbers. My question was basically earlier we used to have spreads of somewhere around 20 rupees per kg. However, in this quarter we have reported spreads of around 25 rupees per kg. So I wanted to know how sustainable are these spreads and what has resulted into this increase in the spreads.
Thank you. See, spread increase is mainly due to good demand in the market. So demand for the yarns have increased substantially as a lot of fabric which was imported is not coming in. So demand for local fabrics has increased. So that's why there is an increase in the spread. And also a capacity of around 5-6% was wiped out in February 2020. So that's why it's created a vacuum in the supply side, and it will remain for times at least 2-3 years because I don't see any big plant coming in before 2-3 years.
So this is not a result of a change in our product mix?
Yeah, slightly because of that, but not mainly. Mainly it's the demand factor in the market which has given this.
Okay, so now we should be able to maintain spreads around 25 rupees per kg for the next couple of quarters.
Or maybe improve going further because in this quarter also you see it's October, November, December, and October November was better than October. October was better than September. So it is upward trend till now.
Okay. So, and now we are running almost near full capacity, around 90%.
Yarn, we are running almost full capacity.
Right.
Only thing is that chips production has been hampered because the availability of raw material was not fully there. There was some shutdowns in the raw material suppliers plants due to technical reasons. So we had to cut chips because that's the least profitable part. So we had cut chips production. So that's why our top line is slightly lower than last year. But as I said, our production and sales volume of yarns have been more than last year.
Okay. Okay. Can you help me? What is our debt repayment plan over the next 12 to 18 months?
See, in the current financial year, we plan to reduce by around 100 crores plus, but we'll be adding 100 plus also because of the power plant. So we will be almost net debt as per near to the last year's numbers or little less than that. And going in FY22, we plan to reduce by at least 120 to 150 crores.
Okay. Okay. And my last and final question on the PET recycling plant that you mentioned. So have we done any study as to how much capex would that require, and do we have adequate land to set up that plant, and what sort of timeline will that have?
We have studied about the capex it will require. We will be doing it in two stages. First, we will only convert waste into granules from where we can make in the existing machines yarn, or we can sell that to other manufacturers. And then in the second stage, if required, we'll put up more capacity to make yarn from that. We will buy a separate piece of land, as I am sure we can get a lot of incentives from the government. And also, if we make a 100% owned subsidiary, even the income tax benefit would be there, because on the new company it is 15%, on the existing it is 25%. So most probably we will be doing in a subsidiary of Filatex, as and when we try to do. And the capex required would be around 100 to 125 crores.
And what sort of revenue can that sort of capex generate?
See, revenue generation would be around 300-350 crores, but I think EBITDA we can get very good by investing 120 crores. We can get a EBITDA of around 40-45 crores from that. Main thing is the EBITDA margins are very good in that.
Okay. Okay, got it. Okay, thank you. I'll come back in the queue.
Thank you. The next question is from the line of Vinit Mittal, an individual investor. Please go ahead.
Hi, sir. Good set of numbers. My this question is for the quarter and quarter, the top line is almost same, but the EBITDA margin is phenomenal.
Yeah.
So so first thing is it due to we don't have chip production in this quarter, as you mentioned, due to the shortage and all?
Yeah. So see, in the quarter to quarter, the sales of chips was 8,500 tons in the last year. This year, the sales of chips is only 394 tons. And yarn sales have been 75,000 tons in this year. Sorry, not 75,000. 85,000 tons. 85,000 this year. And last year it was 83,500. So that's why the chip actually adds to the top line, but not much to the bottom line. So that portion has gone away. So that's why percentage-wise is there. Also, the margins have improved. We have had a lower raw material cost compared to last year, but the selling cost has been, the selling prices have been slightly higher than last year. So the margins have increased.
Okay, sir. And the second question is, in the last earnings call, you said based on the recycling, we are almost 90% to the in-house capacity, where the giants, NISCO, Japan and all are working on that. So what's the update?
Yeah, we are still working on that. There are some finer details we need to close before we go for putting up a... Yeah. So we are trying to do that. I think it will take another 3 to 4 months for us to be able to go through that. Because it's a very slow process. In R&D, it takes a lot of time. Any small change you do, it takes 15-20 days. Then you do some trial runs and then again change. So R&D takes some time. I think by first quarter next year, we should be ready with our plans to go into commercial production and putting up a plant for doing that.
Okay, so last time we had a pilot plant where we were saying, so based on that, we had another pilot, I assume.
No, that same pilot plant, you keep on changing, doing that. No, certain parameters, certain parts you keep on changing and then trying to improve the quality. So we had made a batch plant and now we're converting it into a continuous process, because when we actually put it, it will be a continuous process.
Okay, sir. And my final question is, so in the past, China used to dump the polyester using a Bangladesh route. So currently, I understand this is not feasible, but do you understand now going forward what would be the scenario?
I don't think it will be easy for Bangladesh to put up, because I think government has put certain restriction on the garments from Bangladesh. They have said that certain percentage of value addition has to be done in Bangladesh, then only they can send duty-free to India. So that will restrict a lot of imports from Bangladesh into India. So will increase demand from the Indian producers.
Okay, sir. Thank you, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Rishabh Shah, an individual investor. Please go ahead.
Hello.
Hello. Yeah, please.
Yeah. Hi. Thank you for taking my questions and congratulations on a fantastic quarter. So, based on your commentary, I think the Indian yarn manufacturing space is in quite a sweet spot. Would you think across the industry this would prompt a fresh round of capacity utilization? Capital expenditure, my bad.
Can you repeat the question, the second part? The definitely the sweet spot after that?
So would this prompt a fresh round of capital expenditure in your industry?
Yes.
Yeah, it will, but I think we will need some time. I think we will take a capex plan only, a bigger capex plan only at the end of FY22. We will be doing a small capex in FY22. That is utilizing our spare capacity where we are making chips and converting that also into yarn. So that we will be taking up in FY22. But any big capex to put up a new fresh plant will be only taken end of FY22 after seeing FY22. So
right.
Shortage of PPE.
And for how long do you think these expansive margins could sustain in the polyester space?
I think they can sustain for the long time, because even China has increased its margin, and only China used to be a threat for that. And India will witness a very good demand for textiles for times to come. It is not going to be 1 or 2 years. According to me, it can last for maybe 7 to 10 years. Because China will be vacating a space in textile as they are becoming now like a developed economy. So any developed economy leads textiles. In past, it has been the case. From England to Japan to Korea to Taiwan, as they develop, they have left textile. So China bound to live, but China is so huge, the kind of space it will make. India, it will take a lot of time to cover up that space. Already they have increased the prices. So we should be having a good run for next decade, I think.
So these kind of EBITDA margins can essentially sustain for at least the next 2 to 3 years. Am I understanding that right?
Definitely. They can sustain these margins, or they can improve also going forward.
All right. You also mentioned, something about the inverted duty structure that is currently sort of plaguing the man-made yarn space. Right. What would be assuming, the government sort of sets things right on that front, what would be the improvement in your net working capital position pursuant to such a change?
For us, it will not make much difference. Already, our utilization of working capital is very low. But for our industry as a whole, when people are making fabrics, or garments, the credit times are long, and from them, if they are buying yarn at 12% and then selling their product at 5%, there's too much of GST which gets locked in and the refunds need to be taken, which is a very cumbersome.
Right.
Net government is not gaining anything, but it is creating a lot of red tapeism throughout the whole industry unnecessarily. And as you go downstream, the manufacturer very small units and the number is pretty large. So that's what we have been asking to the government to make it one tax, one rate. And I think Finance Minister has reiterated this a lot of time, but effectively they have not been able to do it. I don't know why.
So it's not like at the manufacturer level across the industry there is a lot of input tax credit that is receivable, and that is sort of taking up.
No, we get the refund, but it takes like 6 months, 8 months, and all those issues are there. So there is a lock-in of the extra GST with the government for a long time. And if you are exporting, then all the more.
Right. And I have a couple of just two very quick bookkeeping questions. What would you say is the average useful life that you consider on for depreciation purposes across your plant and machinery?
Life of plant and machinery?
Yes, on an average, what would that figure be?
We, in our previous plant, we have machines which are like more than 25 years old, and they're running pretty good. So it's a pretty long life. Till the time you take good care of your machines, you can run as long as you want.
So that is what you would be considered in your depreciation calculations? Is that fair to say?
Depreciation we take for the plant and machinery around 25 years for the main plant and machinery.
All right. And if across the textile industry, I believe, contract laborers do, sort of constitute a significant proportion of the labor that works at the factory. So the costs associated with that, would I find them in the employee benefit expense line item of your income statement? Or would it be part of any other line item for your contract labor?
Yeah, that's in salary and wages only.
All right. And lastly, if I may squeeze in a question, what you alluded to some government incentives that could be in the offing for recycled polyester plant.
Not directly to us, but yes, like PLI scheme is being worked out for the garments and fabric sector. So that will boost garment and fabrics. In return, we will get a good demand, and we would also be able to make good margins. Directly, they are not going to give anything to the filament yarn sector. But I am sure they are considering to give it to the fabric and garments, because where they feel that the unemployment generation is very high compared to the capital investment. But indirect benefit, even we get it because the demand for the yarn increases a lot. And also they have a tough scheme for the downstream.
All right. That's it from my end. Thank you very much for your responses and best of luck for the quarters to come.
Thanks.
Thank you. The next question is from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Thank you for the opportunity. Congratulations, sir, on a good set of numbers.
Thank you.
Sir, I just wanted to understand the industry scenario with respect to what was the demand earlier and what has changed post-pandemic, because we've seen this improvement only in the last one quarter. So what really changed in the last 6 months, and how has the demand-supply situation in terms of tonnage changed pre- and post-pandemic?
I just explained, because the imports for fabrics have reduced drastically. So Indian manufacturers of fabrics are witnessing a good demand in the downstream. That is why demand for yarn has increased. And it is going to sustain for times to come, because imports from China have drastically gone down, and also imports of garments from Bangladesh has also reduced. So all that factors have increased demand for the filament yarn and all kinds of yarn. Even cotton is witnessing a very good demand. So it's the demand throughout the textile sector, whether it's yarn, fabrics, garment. Also, exporters are also shifting base to India. So they want to have alternative source. So all these factors have created these margins and demand.
Sir, how much yarn, filament yarn was imported earlier, and which has created this space?
I don't have those numbers.
Okay. And sir, the spread improvement that we witnessed, you mentioned that they are likely to stay for 2 to 3 years, largely because...
I said it can stay for a decade, not 2-3 years.
Oh, okay, for a decade. Okay. And this is largely driven by... so, if it can stay for 2 to 3 years, what kind of spread improvement further can happen, or is it something which is just a time will tell us kind of a scenario? Because there will be product improvements as well that will happen, because Chinese product range is quite far higher as compared to Indian product range.
No, it's not like that. Even Indian product range, everybody is improving, and all the things Chinese are making, we are also trying to make in India. There's a huge import of new machinery which is coming in for the fabrics and garments. So I don't see that. Maybe certain types of fabrics, yes, China or maybe Korea and all specialty, but the volume-wise, those numbers are pretty small.
Okay.
So, and these margins, I am saying it should remain at these levels or improve. See, but it's my word and my estimation. I mean, nobody can say that it will be different. So it's my estimation that it should remain good, because worldwide the demand for filament yarns is increasing almost 3.5 million tons every year. So that those kind of volumes will not be available from China, and when the volumes are not available, of course the margins should improve on whatever volumes are available.
Okay. Understood, sir. And sir, this recycle plant that you talked about,
Yes.
what is the market size of this segment, and where do you see the demand coming from? Domestic market, export market, and what will be the driver for us?
Let me answer that for you. Can you hear me?
Yes, sir.
Recycling was basically being done by mechanical means on the PET bottles. There's a lot of concern about polyester waste and the consumer end waste which goes to landfills and all. So a lot of awareness has come into Europe and America how do you do a sustainable textile business. So recycling of polyester waste, which is partly bottle is a higher ivory compound, which is also polyester, and yarn is also a polyester compound.
Yeah.
Bottle was being handled by many people, but nobody is handling polyester waste. So we are now doing this on a chemical process, and there's a lot of large big companies like brands. Nike has committed a lot of money. Coke has committed to bottles. That if you are going to reuse the polyester and make it as close to virgin as possible, then they'll be buying that and they give a premium on that. Because ultimately you will not be using the hydrocarbons. And the process is certainly a little more efficient than the virgin one because it doesn't involve the crude part. What we are doing is chemical recycling. We are going to depolymerize the polymer waste, clean it up, decolorize, filter it out, and then repolymerize. So obviously, doing this effort in terms of demand, if it is possible, there will be some way on a long-term basis will come to a state whatever you discard will be the demand. So you will have a steady state condition, so much of virgin versus so much of recycling. Nobody knows how many years it will take, but that's what the stable form will be.
Okay.
And all this extra premium and all, it needs a certification from international agencies, and most of the premiums are coming from export only.
Okay.
So big brands all lie outside.
Okay. Is it similar to, sir, what Ganesha Ecosphere is doing?
Well, Ganesha is doing only...
Ganesha is doing basically mechanical recycling. So they are melting the bottles and making directly yarn. We will be doing a depolymerization. That is like bringing the waste back to the raw material stage, taking out all the impurities, and then again polymerizing and making the polyester out of that. So very few people in the world are doing that. So our quality will be as good as the virgin polymer. Their quality is slightly lower than the virgin polymer.
Oh, now I get the difference. Understood. Okay.
Yeah.
And sir, how will the spreads be for this business? Like you said, the margins will be higher, but
right now the yarn made out of the way I am saying and what we are making virgin, the difference is like if we sell for 100 rupees now, and the recycled yarn made out of the way I am saying would fetch around 160 to 170 rupees, the same yarn. That kind of a premium, and the cost of doing that the way we are doing, it will be hardly 5 to 10 rupees higher than the virgin. So there's a huge extra premium in that.
Okay, understood. So this is quite helpful. Yeah.
Have you heard a name called Uniqlo?
Yeah.
So that uses all recycled fiber.
Yeah,
that's a premium product.
Okay.
All the brands internationally are looking for recycled fiber, but they are not getting the quantity what they desire. There is a huge shortage. They are getting hardly 15 to 20% than what they would like to get. So there's that kind of a shortage for these products in the market as of now.
Wow. Which means it's a multi-year very strong
Even in India, I think going forward, government would make it compulsory for people to use some recycle to create sustainability of the polyester.
Just think of Patagonia, Zara, Uniqlo. They are top brands and who are insisting on recycled fibers.
Yeah.
So the whole fast fashion industry will probably be.
They don't mind paying extra price because the price which they get in their products are phenomenal.
Yeah, I understood. I'm getting that opportunity because it seems some designers also really flashing their packaging of the garments also in recycled products.
Right.
And stuff. So the opportunity is not only in garments but also in packaging and
everywhere is opportunity there. So we will be going step by step. First we will make chips which can be used to make packaging, which can be used to make PET bottle, which can be used to make yarn, whatever. And then based on that we will further expand and make yarn or make more chips, whatever is the market.
Okay. And sir, what will be the ROC of such project?
It's difficult. It will be very high. I think it could be like 40%, something like that.
Wow.
Basically, it's like more like a technology, no? The technology which we are trying to develop, we will get a premium for that.
Yeah. And
it's not it's not that anybody wants who can do it, even if we are.
Whatever you're talking about is patented, sir?
We are starting the patenting process. So it will take, I don't know, maybe 3 to 6 months to get it done.
Oh, okay. Great, sir. Thank you for answering the question in detail. All the best.
Welcome. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all participants, request you to limit your questions to 3 per participant. If you have a follow-up question, you may rejoin the queue. Thank you. The next question is from the line of Arpit Sikka from Karma Capital. Please go ahead.
Good evening, sir. Congratulations on a great set of numbers.
Thank you.
Firstly, continuing with the previous participants' questions, with rising ESG awareness globally, of course, recycled yarn is the way forward, and you've made a timely entry into it. And sir, I also you said Ganesha EcoSphere is doing a mechanical process. Is Visakha Industries also doing the same old process?
Which industry you said?
Visakha Industries, the Hyderabad-based, they also do PET to
in India.
yarn. Yeah.
Yeah, India, most of the people are doing the same.
The old process.
Yeah.
And, okay. And sir, how far are we from first production, approximately?
No, it will take a lot of time. See, after maybe 4 to 6 months, we'll start building up a new plant. And so by end of FY22, we will be able to come into production, not earlier. Not FY22, so calendar year 22.
End of CY22, approximately.
Yeah.
Great. And my second question was, sir, with crude prices going back up to 57 and naphtha also following, so the sustainability of this kind of
Not
EBITDA?
a worry. I mean, our industry, basically, prices of raw materials are easily a pass-through, and such a buoyant market, when the demand is good, you can easily pass through and maybe get another buck or so.
Great, great. And so for the next whole year, we can like extrapolate the margins that you made in this quarter?
Yeah, definitely. Maybe better.
Maybe better. Okay. My third question was, sir, this power plant that we've commissioned in the quarter, so what kind of savings are we looking at it from an annualized basis?
Very small power plant, just 1.4 megawatt. The saving will be very less. I mean, I'll not calculate. Maybe in lakhs only, nothing much.
Nothing much. On an annual basis
This
also?
is just to start. We will be putting more solar on this is on the rooftops. We have put whatever is available to try it out.
And the thermal power plant which is coming
Thermal
in
will
April?
be commissioned by April 2021.
Yes.
And that will give an annualized saving of around 45 crores.
That is the big. So that is 45 crores.
That is going to be commissioned by April 2021. So I mean,
that is on.
After this year now. Yeah.
Great, sir. Thanks a lot for answering my question.
Thank you. The next question is from the line of Nitin Agarwal from Shreya Investments. Please go ahead.
Good afternoon, Bagheria ji. Congratulations to you and your team for a stellar set of numbers.
Thank you.
Sir, can you throw some light on how the competition will evolve even from other countries in terms of capacity addition? Because you said China is reducing its capacity and increase its margin.
China is not reducing, maybe they are adding, but see, globally the demand for these products is increasing by 3 to 3.5 million tons. Even if China adds a couple of million tons, it doesn't make a difference. India at the moment is 4.2 to 4.5 million tons. So we can add whatever we want. Still, there will be a lot of space available. And the third one, the capacity in India, outside, is less than 1 million tons. It's Indonesia with 0.8 or 0.85. So this is that kind of a difference. So even if we add 500,000 every year, still we'll not be able to fulfill the world demand. The demand is increasing substantially because in last 10 years, whatever fiber demand has increased, 95% have been made by man-made only. The natural fibers have contributed only to the additional demand by 5%. So availability of natural fibers is very, very limited.
Okay. Sir, since you foresee a very good time for the industry, so are you planning of expanding your capacities further and further capex in the next 2-3 years, other than that specialized environmental?
Yeah, we do plan to take up another capex, but that will take up after end of FY22. Like what we are saying, we see practically happening for 1 year more. Also, the availability of raw material is a constraint at the moment in India. So if we put up capacity, we'll have to import all the raw material, which is not a very good thing. Reliance and the Indian Oil is planning to put up more capacity for the raw material, which will be available, end of FY24. So we will try and put up a capacity which will be matching with their production facility coming in, so that we don't have a problem with getting raw materials.
Okay. Thirdly, sir, this Bilosa plant that had been destroyed due to fire, now have they placed the order for the replacement of that line, or how is it now?
Yeah, I think they have recently placed the order, but the deliveries are 12 to 18 months. So it will not be commissioned before 18 to 24 months.
And how much percent? That is 5 to 7% of the market today, right?
That is around 5 to 6% of the market at the moment. But see, market demand is also rising in the double digits. So even by the time that comes, the demand would have overtaken the supply which will come in.
Correct. So that will be absorbed easily.
Yeah, very easily.
Okay. And earlier you had a plan to set up a textile processing unit. Are you still holding that plan, or
No, right now, no. Because we are now finding this recycling project to be more interesting and in synergy with what we are doing. So we'll be focusing more on the recycling part than going into fabrics or something at the moment.
So can we broadly say for the next few quarters you will run at full capacity with the best?
Capacity utilization in our company has been almost full throughout, barring very, very small instances. Otherwise, as a year, always we have been utilizing yarn capacity more than 95%. So the utilization of capacity is never a problem. The problem is the margins which we get in the market. So now we see these margins to be sustainable or improving going further. That's the main thing.
Okay. So this will be at least sustainable going forward, and if possible.
Yeah, this is what I feel it will be sustainable or improving going forward.
Okay. Thank you very much, sir, and wish you and your team best of luck.
Thanks.
Yeah.
Thank you. The next question is from the line of Shubham Gupta from Avendus Capital. Please go ahead.
Hi, sir. Hello. Thanks a lot for delivering this fantastic number. Congratulations. The first question is, sir, from October to whatever in January, we have seen a huge rise in yarn final prices. What are the current prices at which you are selling your product? Has it crossed 110, 105? What is the current revenue?
See, our lowest yarn price today is around 88 and the highest is around 180. Which price do I give you? We have a product mix where you have different prices for the product.
No, so I'm talking about...
I can't give you one price.
Yeah, I'm talking about PTY.
Yeah, in PTY also you have a range right from, let's say, 100 rupees to 130, 40 rupees. So the range is there in everything.
Just asking from December to today, what is the price increase?
Okay. So if I take one commodity particular rate, let's say it was 100, what timeline you would like me to be? From October?
From October to January, I just want to understand. So just pick up a particular product which you think is there in your mid segment from October to January. If you can just give me a timeline, ki what was this in October, November, December, now in Jan. Hello. Hello. Hello.
Mr. Pangadia, can you hear us? Hello.
Hello. Yeah. I think we have lost Mr. Bagaria.
Just give me a moment. Ladies and gentlemen, kindly stay connected while we check the line of the management. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the line of the management connected. Thank you, and over to you, sir.
See, hello, can you hear me?
Yes, we can.
The person who was asking the question.
Yes. So, sir, the basic question was that sir, if you can put up.
I just telling you, see, the price rise has been around 16 rupees, and out of that, around 11 to 12 rupees has been the rise in the raw material prices. So our margins have increased by 4 to 5 rupees in this quarter.
So this you are talking about from October to December. I'm asking in Jan, what are the kind of again spread increase from 25 to
no Jan still there's no increase in the spreads in Jan. Only whatever has been increased in the raw material prices has been a pass through.
So again coming out to the capacity utilization, you said that in Q3 there was a problem in chips business because the raw material availability was a problem. What do you think in Q4 is happening? You are running in full capacity.
Now, first half of Jan, yes, we had some issues, but now we have enough raw material, so we are utilizing the chips capacity. But the margins in chips are very poor, so we don't run chips to the full extent. For the market, we run around 50-60% of the extra capacity of chips which we have, other than our own.
So it's safe to assume that production which you did in Q3 will be replicated in Q4 and not much more than that? 85,000?
With Q3 there was no chips for the market. Q4 will definitely have chips for the market, maybe around 6,000-7,000 tons.
X chips it will be 85,000 only or more than that? Leaving the chips aside.
But see, it's very difficult to say. You have to keep on changing your product mix, which changes the volumes.
I agree. Yeah.
It will be in those vicinity, plus minus 2-3%.
Understood. So more or less it will be same. There can be some aberration.
Utilization of all the machines is full. It cannot change more than that now.
Correct, sir. So another question, I have seen in past 3.5 months you have done a lot of buying in your own company shares. But the reduction in pledge is not that much. Any rationale why are we not reducing the pledge that much, and what is that loan for?
I have pledged my shares with the existing bankers. We have not borrowed any money with this pledge. I have said that before also. This is like a collateral given for the term loans taken in the company.
Sir, with this kind of margins which we
money on these shares.
So with this kind of margins which we are doing and currently the business profile, are we not negotiating with bankers again because I can see a good asset block also?
Yeah. On the paper, this is the first quarter which we have done good after the pandemic.
Correct.
We are able to do 2 quarters consecutively, and then we can go to the banks to release the pledge. No. Today, no bank will release the pledge. He is not sure whether he'll get his money or not. They are facing a lot of stress from other companies. So we have to look from their view also. No? Had you given, would you have released the circumstance? I don't think so.
Breathe, man, breathe. Give us another.
I have not borrowed money. If I release the pledge, it is going to lie with me.
Sorry to interrupt. So we are unable to hear you. Hello, this is the operator. Can you hear us? Ladies and gentlemen, request you to please hold your lines while we check the line of the management. Thank you. Ladies and gentlemen, thank you for patiently holding. We have the line of management reconnected. Thank you, and over to you.
Yeah. Hello.
Yes, So we will move to the next question, which is from the line of Deepak from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So just wanted to understand, you have been talking about the margins improvement on the back of benign supply-demand scenario. And in addition to that, about 40-45 crore savings as well from the thermal power plant that is likely to get commissioned by April 2021. So what sort of improvement in margins are we talking about if we factor in all this situation from currently about 16-17%? So where do you see it stabilizing after we take the benefit of these impact?
No, see, margin, as I have said, you have to see in the absolute numbers. If you will see in percentages, it can always distort. When we will sell more chips, the margin will go down. So 120 EBITDA might become 125. But margin-wise, 16 can become 15. So my goal is to make 120 more than 120, not to make a percentage higher. So in our industry, the absolute number is more important. No, what you make overall. Whether from 1,000 crores you make 100 crores or from 800 you make 120 crores, which is a better situation. So 120 is more better than making 100 from 1,000. So
yeah.
Going forward, what I have said, we will make a better EBITDA than what we have made this year. Forget the percentages.
Okay.
Yeah, because in the same machine, I can make 2 times the yarn or single time, depending on the market or the product I make. So my top line will go double if I make a thicker yarn, but I will not get double the margin. Maybe I get 1.2 times. But still, that will be much more beneficial for the company. So that's the thing. So whatever margins will improve over and above 120 plus a 10 crore EBITDA from the power, you can say, if we do it. First month, of course, it will not add, but subsequently after the first quarter, we will have an incremented 10 to 12 crores EBITDA coming from the savings from the power over and above.
That is 10 to 12 crores per quarter, right?
Yeah, so if I say 45, so that comes to around 11, 12 crores per quarter.
Okay, fair enough. Okay, understood. That's it from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Sudhir from Rigor Time. Please go ahead.
Hello.
Yes.
Hello. See, I'm Sudhir Beda from Right Time Consultancy.
Yes, please.
Congratulations, sir, on the great set of numbers. And I have heard all the phone call and all the answers. I think majority of my questions are answered. And wish you all the best. And I believe that the time of polyester industry has come for the next decade belongs to polyester industry. So congrats and all the best. Thank you.
Thank you.
Thank you very much. That was the most sensible question.
Thank you. The next question is from the line of Rishabh Shah, an individual investor. Please go ahead.
Hello? Hello?
Yeah, can you hear me, sir?
Yeah, I can.
So I just want to understand, in the initial remarks you mentioned that this price increase was due to the supply side capacity, there has been reduction in supply side. So I just want to understand, we have recently Reliance has taken over Alok Industries. So they have large unused capacity over man-made as well as cotton. And plus they also have some advantage in raw material pricing since their Reliance is taken over now. So I just want to understand how does this supply side dynamics and competition scenario change, after the Reliance, ramps up Alok's capacity going forward?
See, Alok has been running throughout the last quarter full capacity. So that is already absorbed by the demand. The demand is so robust that has been absorbed. Alok has always been running 60% of the polyester capacity. Regarding cotton, I cannot comment. I am not in cotton business. I cannot comment about cotton. But polyester, they have been running 60%. So whatever additional they have added in this after Reliance takeover has been absorbed by the market.
I'm just saying from the next 2 to 3 year perspective, when things, when they become a bigger player in the market, I just want to understand from that perspective.
I couldn't follow. If everything is being absorbed in the market, what else they can do? They can't bring new capacity. They will, even if they want to plant today, it will take at least 2 years for them to bring the new capacity. The kind of machines, imports, and whatever you need to do, it takes around 2 years to bring in a big capacity.
Okay. And second thing, they mentioned that the government is planning a change in the scheme from MEIS to RODTEP. So what kind of rate do you expect from the earlier rate benefit that was available?
So that I cannot say, but this is what is in the offing, and I'm sure they will do something better. It is not for our industry. This will be basically for fabrics and garments. MEIS also was basically mainly for fabrics and garment. Our product didn't used to attract any MEIS.
Okay, so thank you.
Thank you. The next question is from the line of Vikas Jain from Equirus Securities Private Limited. Please go ahead.
This is Maulik Patel, sir. Thanks for the opportunity and congratulations.
Thank you.
I have one question. You mentioned that incrementally world need around 3.5 million ton of polyester yarn capacity every year, and we have been adding around whatever the number of 0.3 to 0.5 million ton. And this year you are not adding any large capacity. And again, you mentioned the Reliance has so far not announced any capacity addition. Are we going to see material capacity addition from the other players in the current calendar year or the next calendar year?
See, next calendar year, the capacity will come in. That is what Vidota had prior. So they are putting that capacity. So that capacity is around 0.25 million tons. So that will be commissioned end of calendar year 22. Other than that, I don't see any major capacity coming in.
So this year, I think the industry demand is much more going to be like a tight supply will be there.
Yeah, it is going to be a very tight supply in at least next 2, 3, 4 years, because also the demand for the yarn is increasing very fast. A lot of looms are coming in. Every year, almost every month, 1,000 looms are coming in. And the availability of yarn from the natural side is very, very limited. So mostly they will be using synthetic yarns and especially polyester. So the demand for polyester is going to remain good for times to come.
And sir, we've been importing not from the China, but after this anti-dumping duty, which is for around 12%, the import must have come down, right, in the last 1.5 years?
Anti-dumping from China was only on FDY yarn, so that has been removed. So FDY yarn maybe will start coming end of this quarter, but that will not make a substantially reduction in the margins. Because in China also the availability of that is not very good, and the freights and inconvenience of importing will always remain. So I don't see any reduction in margins because of that.
Yeah, just last question, if you allow me. Historically, we have made around 10 rupees a kg kind of in a spray on an annualized basis for the last 4-5 years.
No. We have been doing around more like 7 or 8, 6, 7, 8.
Yeah, 7, 8, right? And right now we will be making excess of 15
I'm talking about EBITDA, not spread. Spreads could have been higher. Normally I see the EBITDA. EBITDA has been 6, 7 rupees. Spreads could be around 22, 23 rupees.
Okay. So I was thinking about this year, I think given that the way from the historical numbers, in the coming year, it can be at least 30-40% higher on a sustainable basis. Is there a fair assumption?
I foresee, yes. It could be at least this year we have made a EBITDA of around this quarter we have made a EBITDA of around 13.5 to 14 rupees. So I see this is very sustainable or maybe improving going further.
Sure. Okay. Great, sir. Thanks. Wish you all the best.
Thank you. The next question is from the line of Mohit Bansal from Ajinkya MPL. Please go ahead.
Yeah. Good evening, sir.
Good evening.
And congratulations for the good set of numbers.
Thank you, Mohit.
Sir, over the last 1 hour, you've explained thoroughly in terms of your confidence on the margins.
Right.
Sir, you would be in a sweet spot now in terms of cash flows.
Yes.
With an outlook of about 450-500 crores EBITDA per year. What will be the best use, sir, according to the management of this cash flow?
It will be, we are putting up like additional capacity to use chips to yarn, convert whatever chips extra we have to yarn. That is one step which we'll be doing in next year.
Right,
and
sir.
then we will also reduce our debt in the next year. And later half of the next financial year, we will start building up our that recycling plant. So these uses would be there.
So anything to reward the shareholders, sir, in terms of a good dividend payout policy?
Definitely that we would do after the end of this financial year. We will do either declare dividend or a buyback, whichever is more suitable to the shareholders from the point of view of the taxation.
Yeah, that would be great news, sir.
Yeah, definitely we'll be doing that in this after this financial year. But whether it will be a dividend or a buyback, that we will see which will be more fruitful to the shareholder in terms of taxation. See, now the taxation policy might be tweaked by the budget. So based on that, we will take a call.
All right, sir. And sir, my last question would be, what are the expectations on the upcoming budget?
Not too much. There is not much to tweak other than some personal tax or capital tax or dividend tax from a business point of view. I don't think there is much left in the budget other than these points.
But the inverted duty revision in the GST?
GST cannot be done in the budget. It has to go through the GST council. So that's not a part of the budget.
All right. Okay. Understood, sir. Thanks a lot, sir, for the answers.
Thank you. The next question is from the line of Ridhima Chandak from Roha Asset Managers. Please go ahead.
Thank you for the opportunity, sir. And congratulations on a very good set of numbers. Sir, just clarity on the capex part and our recycled polyester chips plant. So what would be our total capex for FY22? And till now, how much capex we had done in FY21?
Say FY21, our capex is mostly for the power project. The total capex for the power project is 165 crores. 6.5 crores was for the solar, which we have already completed. So other than that, in FY22, we would be doing a capex of around 100 crores for putting up more POI and DTY for whatever chips we have. And then maybe 20-30 crores for the recycle project in FY22. And the balance for the recycle project would be taken up in FY23 because the recycle project will go up to FY23.
Okay.
The total cost in the recycle project would be around 100 to 120 to 30 crores. That's approximate number which we have calculated.
It would be complete by the end of FY22 we are expecting.
Yeah, we will be able to commission it by end of FY23.
Okay. And also, this I missed. Actually, my line was disturbed. At the time you just stated some numbers like revenue generation would be 300 to 350 crore, and EBITDA would be 120 odd crores. So this is from this recycled chips.
Recycle, the revenue generation could be around 300 crores. It depends on the raw material prices at that particular time. But EBITDA, I said we should be able to do around 40 plus for the investment of, let's say, 120 crores.
Okay. So
it's important than the revenue. See, revenue in our industry, as I explained, depends more on the raw material prices.
Okay. So this you are expecting by the end of FY20 this kind of revenues and EBITDA.
FY23. So and whatever we are going to invest in FY22 for the yarn, that 120 crores or whatever we do, that will also get us a return on the capital employed of around close to 30%. So that should also add another 30 crores in FY22 to our EBITDA.
Okay, sir. Thank you for the clarification.
Thank you.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Rohit Mall from Avendus Capital. Please go ahead.
Hello. Hi,
Yes.
sir. Congratulations on the good set of numbers.
Thank you.
So I have a couple of questions. The first question is, you mentioned that the import from China has gone down in
Yes.
the last week or month.
Yeah.
So may I know the reason, sir?
Reason is, I don't know, people are not able to travel or they want to buy more local. Difficult for me to say.
We have heard that freight costs have gone up by like.
Yeah, freight cost has also gone up like 4 to 5 times than what it used to be pre-COVID levels.
Okay, so is it
And
impacting?
availability of container is also very poor.
Okay.
So there are a lot of factors. You can't say it's one factor is there.
Okay.
Also, prices in China have increased tremendously. So I do not know which factors, but definitely the import from China has gone down and looks like it's going to stay for a long time. Government also doesn't want people to import much from China, so they are discouraging imports from China in whatever way they can.
Okay. And so second question is, from my industry sources, I've heard that for the last 2 weeks, the demand has been slow. The reason being the pricing of yarn or maybe today has gone up by like 15-20%.
It was, the demand was slow for a couple of, 1 week or so. But it has picked up quite a bit from 1st of Jan. I think the demand has been very good in the west. In north, it is slightly slow because of this farmers' agitation and they are not able to move their goods so much. But overall, the supply side, the sales side, there is no problem because normally they are booking orders for 1 month or 20 days. So if even it's slow for a week or 10 days, it doesn't make a difference in the sales volume. Only thing is you don't get more bookings, but your sales are continuing because you have orders booked for that period. So your order book will slightly go down, and then when the again demand comes up, you can fill your order book.
Okay, and so but prices have gone up by 15-20%, I heard. Is that correct?
Yeah, prices have gone up, but also the raw material prices have gone up. So everything is not the prices which has gone up is a margin. So mainly raw material prices have gone up, and also some margin improvement has been there.
Okay, sir. Thank you. Thank you for answering.
Yeah.
Thank you. As this was the last question for today, I would now like to hand the conference over to Mr. Madhusudan Bagheria for closing comments.
Thank you everybody for joining us and hope to catch up with you in the next conf call. But if you have any questions or any more clarifications required, please email to my team and me. We will be more than happy to answer and take care of that. Thank you very much. Have a good day.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thank you for